couple of points that are worth highlighting given the volatility that we've seen, particularly earlier this week. Firstly, global equity markets have clearly had a degree of profit given the positive performance, notably from the US and also from the wider technology sector. And so any indication of volatility tends to result in a degree of profit taking. There are a number of factors that appear to have been responsible for the catalyst, and as ever, there's speculation as to which was the most important, but it would be fair to highlight that some of the recent US economic data seemed to surprise market participants. The US jobless claims were notably higher than expected, and also the PMI data was slightly disappointing. This data resulted in investor enthusiasm to buy bonds over equities. Bond yields declined, and equity investors had concerns as to whether or not there would be a US soft landing or indeed a recession. The increase in interest rates from the Bank of Japan also seemed to be responsible for the unwind of the so-called carry trade, which resulted in greater currency volatility from Latin America through to Asia itself. That said, we as investors at Aubrey have experienced many of these incidents over the last 30 plus years of our career. In our opinion, this is exactly the time for cool heads, seasoned investors, step back from the noise of the market and reassess the fundamentals of the companies that we are investing in. One of the casualties of this recent equity market correction has been the technology sector. And clearly many of the large US names dominate the headlines, but this has also been evident amongst several of the leading players in the Asian listed technology arena. This has not been a traditional area of focus for the Aubrey AGM product, but we are well aware of the world-class nature of many of these companies with industry-leading positions, with excellent returns on their business operations, and also very positive outlook for their growth, coupled with attractive valuations. We believe that a number of these companies do look to be attractive opportunities, particularly in relation to the current valuations compared to that which we consider over the historic business cycle where these companies have operated. Consequently, we are reviewing the growth opportunities in a number of these names with a view to considering some inclusion within our portfolio.